The person in this video is not a paid actor, but an actual SunWest employee.
Hey everybody, Buffy the Rate Slayer here, and we are back with a second episode of the March 2022 Weekly Market Insight Series directly from the Capital Markets Trading Desk right here at SunWest Mortgage Company. All right, financial markets continued to be in disarray. Any headlines related to the war and associated sanctions have been roiling the financial markets and whipsawing the assets from stocks to oil and foreign currencies for almost 2 weeks now. Evidently, this week too, all the focus was on Russia, Ukraine, and its inflationary impact on energy and natural resources. The conflict so far has created havoc in oil markets, roiled commodity prices, and wither away the American consumer sentiments at a time when they were already dealing with the highest inflation in decades. Yields for government debt rose swiftly this week. U.S. crude oil topped $117 a barrel for the first time in a decade after President Joe Biden banned imports of Russian fossil fuels, including oil, and pledged to hobble Russia's economy. OPEC Secretary General Barkindel warned that the world doesn't have sufficient oil production capacity to replace Russia's contribution to crude markets. So, big question, what else is steering the market? Unfortunately, oil is not the only commodity that's being impacted. Prices of wheat and certain metals also saw a dramatic price increase amidst potential supply chain disruptions. The safe haven assets also rallied. The recent report on the Consumer Price Index raised many eyebrows. U.S. inflation rose again in February to 7.9%, the biggest year-over-year increase in 40 years. The U.S. market for new listings has shuddered to a halt and is now heading for its slowest period since the financial crises over a decade ago. No company priced a traditional initial public offering last week amid the war in Ukraine, and the calendar was blank for this week as well. A report from Labor Department showed initial claims for state benefits increased 11,000 to 227,000 for the week ending March 5th, still at a level consistent with tight labor markets. The U.S. Central Bank bought close to $6 billion of treasuries and mortgage bonds in the past 2 years. This Wednesday's $4,000.025 billion operation looks set to be in its last, and treasuries and mortgage operations are running currently. With this, the largest Federal Reserve bond buying program is about to come to an end. Looks like prior week's lower mortgage rates brought home buyers back into the market. MBA mortgage application index rose 8.5% in the week ending March 4th after falling 0.7% in the preceding week. The conclusion? Federal Reserve officials are set to meet on March 16th to review interest rates to control the raging inflation. FOMC Chairman Jerome Powell voiced support for a quarter-point Fed rate hike earlier this month. He mentioned that the labor market is extremely tight and the economy is expanding with enough force to withstand higher borrowing costs. The sanctions and the war have, however, roiled commodities, sending oil prices to new heights along with materials from nickel to wheat. I must say, it will be interesting to see how policymakers undertake this complicated task of policy tightening to curb the inflation without grinding the economy recovery. Yes, that was a mouthful, everybody, but it is all we have this week. But of course, join me again, and I will keep you updated on the status of most alarming geopolitical crises, much-awaited FOMC interest rate decision, figures on producer price index, retail sales, industrial production, initial jobless claims, and so much more. You don't want to miss it. Market Insight will keep you updated with our news, and our trading desk will keep you informed with pricing incentives. Have a happy Friday. It's Friday, everybody. Have a great weekend. Buffy, out.